Welcome, ladies and gentlemen. This is Better Trades coach Robert Roy. Welcome to the Market Insights Pattern of the Week. This is brought to you by BetterTrades.com. Ladies and gentlemen, what we do here is each and every week we try to highlight one particular pattern, one stock, one candidate that we looked at in the Market Insights and kind of walk you through the details of that trade setup. Why did we take it? Why did we announce it? Why did we give it? What are the reasons behind the entries, the exits, and so forth? Now, keep something in mind. Every single thing that we're going to look at here today is for educational purposes only. None of this is meant to be advice or recommendation. Each one of these trade setups have already happened. It is not to teach you what to get into now. It is to teach you what to look at and look for on how to analyze a position and potentially should I take that trade, meaning you, based on your risk profile and risk tolerance. So let's go ahead, ladies and gentlemen, and jump right into our disclaimer. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed in order to do so. I am not, and I do not want to be. So, if you find a candidate, an indicator, anything, something that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into that trade, the setup, or the indicator. And then and only then would you do so if it fit your own personal risk profile and risk tolerance. Now, keep something in mind. I am not under any trading restrictions, which means I may choose to enter or exit a trade at any given time without prior notice. All right, so ladies and gentlemen, the stock I want to talk about today is Caterpillar. Now, we had Caterpillar mapped out. We had our Fibonacci's drawn on there, but we have seen Caterpillar in this area of neutral. So that area of neutral, very simply, is that yellow rectangle box. Now, the yellow rectangle box I'm referring to is the big box, not this little yellow one here. That's the last update we did in our Market Insights. This rectangle box is here to show us a particular trade setup. And when we see this box, it tells us to look at potential day trades. Now, in the Market Insights, I don't take every single day trade every single day on these positions and show them in the insights. I only take them if the setup is right. So if we did our last update, and maybe if I just back this up a little bit, we did our last update here. So what would be an ideal setup for me? Something that moves to either a support or resistance level, because a neutral bias, which is where we are right here, is a day trading pattern for us. So the next day we open up down here, we're nowhere near the top or bottom of our box, and we moved higher. Doesn't mean you couldn't have taken the trade. We don't take it in the insights because I don't have a good repeatability method of, for every one of you, you could consider this as a potential entry. So what we look for are stocks that open or move to one of the tops or bottoms of the boxes and start to show some weakness or strength on an intraday basis, and then we consider, do we really want to take this trade or not? So if we go one more day, you can see on this day we opened up, and those of you that are familiar with candlestick charting, and I know the ones that have been through anything I've taught are, we had our opening price right here. We moved on up to our high, which was the top of our wick, and ultimately we closed out at the bottom of the body right down here. And of course, the bottom of the wick was the low, right? So we made a move. We gapped up to our opening price. We made a move up towards the top of our rectangle, and the rectangle will adjust on a regular basis, folks. As we go through, you might see that rectangle in a slightly different place. All right, so even from the last time I did a Market Insights, this rectangle could be bigger or smaller based on where I see the strengths, supports, and resistances of the various candles and where they're hitting in its box. All right, so on this particular day, we looked to take a bearish trade. Why? We had reached up and hit the top of the box. The S&P had been rolling over. And at that point, the decision was, let's look at an intraday chart. Right, and this was taken on a Thursday. Was the setup. So here is the intraday chart, and let me try to do it this way. Actually, let's see if we can't do it like this. I've got to be careful because with multiple monitors, it wants to stretch across all of them. All right, so let me go ahead and back it up just a little bit, I think. Yep, okay, because I moved it, everything kind of moved. So I have a few different lines drawn on here. I have the top and the bottom of my rectangle. My box is drawn, which here's the top of my box, and let's see, is this the bottom of the box? Let me do this. So about 95, 80, right. So this is the bottom of my box. So this is the top, and this is the bottom of my rectangle. This was a moving average line that was in here. So horizontal support level of a moving average. So as we watched Caterpillar, it closed down here. Right? It closed down here and it opened right here. Actually, that was closed, right? It opened up here. We moved up, and these are 5-minute candles. We moved up into this level. We pushed up even a little bit higher, and we started to show some weakness. So right around there, let's call it 97.5. If you took the bearish entry, now you could have shorted the stock, you could have bought the options. Primarily what we teach in the Market Insights is we buy the options. So if we bought to open Caterpillar at 97.5, what did you do? Well, you just watched. And Caterpillar continued to drop, continued to drop. If you were targeting the moving average, you could have gotten out of some of your trade from 97.5 at 96 and 3/4-ish. Call it $96, okay? So you had about a $97. You had about a 50-cent drop in there. So could that moving average have been used as a place to scale out of this intraday trade? Because no matter what, we've got neutral box. We're out of this trade come the end of the day. No ifs, no ands, no buts. So if you scaled out of some right there, let's call it $97, and you scaled out, and then you watched for your next target, which is the bottom of our rectangle. And we moved down to about $96, we'll call it, and we close out the balance of the trade. So what level you chose to do this? If you had 10 contracts and did 5 and 5, if you wanted to do 3 contracts on the first exit and 7 on the second, really up to you for your risk tolerance. We teach a very specific method called the 4-3-2-1 exit system in the Market Insights. That's a very standard operation for us. Every single trade setup that we take is taken with that setup in mind. Now, when it comes to day trading, there are some slightly different rules. And again, these are some things we go more in depth, and you'll catch them on the videos as you're with us as we're producing those and seeing those trade setups develop along the way. So with that, ladies and gentlemen, we are done. I want to wish you all the best. God bless. And let me take this off of there. And hopefully I will see each and every one of you next week at our next update. Take care now, folks. Bye.